Haven't heard. Figma set to go public on the New York Stock Exchange today. It's a design software company. It priced its offering at $33 a share. That was above expectations. It will raise a total of $1.2 billion, although much of that is actually selling shareholders. Somewhere around $350 million or so being sold by the company that will help, obviously, its growth trajectory. Joining us is New York Stock Exchange President Lynn Martin. Always a good day for you, I assume, when you've got an IPO of this size. A lot going on outside. Our viewers obviously heard a lot of the tumult here that's finally quieted down.
Yeah, we have a whole block party going on outside. We got about 1,000 people outside creating. I mean, today is a day when design is going public. So there's a lot to celebrate.
Yeah. Is the IPO pipeline you and so many others have been waiting for finally really a serious thing?
Yeah, it is. It's actually happening now. I think given that Figma did so well with their pricing last night, and there is so much demand that has persisted still in the order book this morning for this company, I think this will open the floodgates. But even just in the month of July, we've raised almost $5 billion of capital for companies who have IPO'd on the New York Stock Exchange. So feels like the market is finally back.
It does.
Yeah.
All right. So what does that mean for the rest of the year then in your expectation?
I think you'll see some of the names start to get out, some of the names that we've been talking about for a while. We're working with a variety of companies to come public later the month in August, but then also September, October. The pipeline's looking really robust.
But do you have to be an AI or stablecoin to go public right now?
No, you don't. Figma does have an AI story, but they're not a pure play AI company.
Software, right.
They're software, which is why this IPO is so important to the market. It's a good, strong software, collaboration software name that's coming to market.
What do you think are the key drivers? I mean, clearly the stock market at a record high is helpful. Mm-hmm. What else?
Clarity on the tariff situation. I mean, you saw so many companies flip public in March. We were gearing up for a really busy April. And then, given the announcements, there was a bunch of uncertainty that entered into the market, as you guys reported so eloquently from here, during the first 2 weeks of April in particular. So companies put their plans on pause. Now that there is certainty, deals are getting done on the tariff side. The market's at all-time highs. Now is the time to go.
Yeah, now's the time to go.
Yeah.
So, all right, so when they come to the New York Stock Exchange and they're saying, we don't know, maybe it'll be NASDAQ, maybe it'll be you guys, what's the pitch? What are you doing upstairs that's getting these people listed here?
Well,
other than, of course, us.
Right.
The amazing partnership we have.
Sarah Eising alone.
Absolutely. We won't talk about the studio over there.
Yeah.
For our other friend. There is no other experience like going public on the New York Stock Exchange. It's the combination of our market model with the guys on the floor. They add stability to the openings and closings every day, not just on IPO day. It's also the amazing services and the amazing partnerships we can strike with companies. It's really not, there really is no comparison to going public.
There's been some chatter. Speaking of, there's been some chatter about European companies relisting in the U.S. I know AstraZeneca, we didn't get much. I spoke to the CEO, but that chatter was out there. I think there are others as well. Is that something that you're actively pursuing? Are we seeing that happen?
If you look at the track record we've had with CRH, with Ferguson, with Flutter, even with the Smurfit-Westrock combination, people have seen significant value appreciation by moving their primary listings to the U.S.
All right, so Lynn, when we wrap this year up, because we've been waiting for a big IPO year, are we going to be saying? We may not set records, but we're going to be up significantly over the last few years, I would assume, in your opinion.
Yeah, I believe we will, and importantly, I believe that the companies that are coming to market are going to have significant value appreciation in secondary trading, which is really what gets founders excited about going public.
Why? Because of the market or because of the quality of companies going public?
Because the diversity, breadth, liquidity in the U.S. markets, and also the quality of the companies coming to market. You look at companies like Circle, who have come to market and the amazing performance that they've had already.
But then when you see like the most shorted stocks in the market go up 70% on a given day, the meme trade, which is back, does that worry you? Because then it's reminiscent of 2021, where everyone was going public then too, and then it all just
SPACs also huge. SPAC public
and IPOs, and then it all shut down and everyone underperformed.
They're back now too. Yeah.
Well,
there's
a couple of things there. There was a glut of SPACs coming to market in 2020 and 2021, which really diluted that as a method of going public. The meme stocks, there are people that get behind certain companies at certain points. And if you look at the breadth and depth of liquidity, it's not just meme stocks. You look at the significant value appreciation, institutional investors who want to broaden out their portfolio. All of the institutional investors I talk to want to add to their portfolio. And if you look at a lot of the private companies, they're excited to see those companies go public.
Lynn, we've got to leave it there on this big day for you guys here at the NYSE. Thank you.
Thank you.